The markets are convulsing in a high-stakes drama that could redefine global finance for years. Just days into 2026, President Donald Trump's audacious push to control Greenland, threatening tariffs on European NATO allies, sparked a brutal sell-off, only for him to dramatically backpedal, announcing a framework deal with NATO and ruling out force. Stocks surged in relief, precious metals paused their rocket ride to records, and risk appetite flickered back to life. Yet beneath the rebound lies fragility. Tariff shadows linger, geopolitical poker continues, and asset classes swing wildly between fear and greed. Today, January 22nd, 2026, the financial world holds its breath, caught between de-escalation euphoria and the ever-present risk of renewed chaos. For stock market, we observe a relief rally after tariff scare. Wall Street staged a powerful rebound on January 21st, erasing much of the prior day's carnage triggered by Trump's Greenland-related tariff threats against Europe. The Dow Jones Industrial Average surged nearly 589 points, or 1.2%, closing at around 49,077. The S&P 500 climbed 1.2% to approximately 6,876, while the Nasdaq Composite advanced 1.2% to 23,225. Futures this morning point to continued gains, with Dow futures up about 200 to 244 points, S&P 500 futures plus 0.6–0.7%, and Nasdaq 100 futures plus 0.9 to 1%. The catalyst? Trump's pivot at the World Economic Forum in Davos. After vowing no military force for Greenland and unveiling a NATO framework deal, he called off looming 10% tariffs on select European nations set for February 1st. This soothed transatlantic fears that had fueled Tuesday's sharp drop, the Dow's worst in months, down 1.76% amid broad risk aversion. Tech and chip makers led the charge, with Micron and Meta up around 2%, buoyed by easing geopolitical strains lifting risk appetite. Small caps shone too, with the Russell 2000 hitting a record close amid the rally. Yet caution persists. The VIX fear gauge spiked earlier in the week, and investors eye upcoming data like PCE inflation. Broader sentiment remains tied to Trump's unpredictable trade rhetoric. Any revival of tariffs could reverse gains swiftly. When it comes to gold and silver, there is a safe haven surge. Pauses, but records intact. Precious metals, the ultimate fear trade, exploded higher amid the Greenland crisis before steadying today. Gold, after hitting all-time highs near $4,888 per ounce earlier this week, slipped modestly to around $4,800, $4,827, amid reduced safe haven demand and a firmer dollar. Silver, which tripled in the past year on industrial demand and retail frenzy, traded near $93–94 per ounce after peaking above $95. The metals run was fueled by risk aversion as U.S.-Europe tensions flared. Trump's threats revived Sell America trades, pushing investors to havens. Forecasts remain ultra-bullish. Goldman Sachs targets $5,400 by December 2026, while Robert Kiyosaki boldly predicts silver at $200 per ounce, citing its monetary history and tech role. With tensions cooling, prices dipped, but underlying drivers, central bank buying, AI-driven industrial use, and persistent inflation fears, suggest the bull run endures. And regarding cryptocurrency, we see a volatility shrinks, where Bitcoin holds near $90,000. Crypto mirrored equities relief, stabilizing after tariff jitters. Bitcoin reclaimed $90,000 territory, trading around $89,500 to $90,000, with modest gains of 0.7 to 1.5% in recent sessions. Ethereum hovered near $2,986 to $3,020, up similarly, while the total market cap climbed to $3.04 to $3.12 trillion. Volatility eased as tariff fears faded, with traders rotating back into risk assets. Bitcoin's leverage cooled, liquidations slowed, and sentiment shifted from fear to cautious optimism. BlackRock remains bullish on Ethereum for 2026, highlighting its 66% dominance in real-world asset tokenization, despite price lags. Broader crypto eyes improving conditions into late 2026, though short-term fragility below key levels like $90,000 for BTC persists. For geopolitics, Greenland de-escalation takes center stage, but shadows linger. The dominant force shaping markets today is the Greenland saga. Trump's Davos speech and NATO framework announcement, backing off tariffs and force, triggered global relief rallies. NATO's Mark Rutte emphasized stepped-up Arctic security under the deal, yet discord simmers. EU-US tensions over Greenland control remain, with some allies wary of Trump's Board of Peace initiative launched amid skepticism. Broader risks include potential renewed tariff threats, U.S. debt debates, and shifts like burden sharing in the Middle East, Turkey, Israel, Saudi dynamics. Trump's renunciation of post-World War II liberal order leadership at Davos signals a multipolar world, with China gaining as U.S. protectionism rises. Markets trade the de-escalation narrative, but volatility could spike on any reversal. When it comes to real estate, there is a modest optimism amid affordability strains. The U.S. housing market starts 2026 in boring but stabilizing territory, welcome after years of extremes. Mortgage rates ticked up slightly to around 6.10 to 6.13% for 30-year fixed, pressuring affordability but far from 2022 peaks. Inventory rises, listings 20% higher year over year, giving buyers options and curbing bidding wars, though shortages persist. Pending sales hit lows, with some warning of collapse risks if institutional buyers exit or rates stay elevated. Builders cut new home prices, median down 8% year over year to $392,000, using incentives like rate buydowns. Forecasts see 14% sales rebound in 2026, modest 2 to 3% price growth aligned with inflation, and gradual affordability gains via wage outperformance. Builder confidence dipped, NAHB index at 37, negative for 21 months, but boring normalization, more listings, less frenzy, offers hope for balanced recovery. Trump's moves to limit Wall Street investors could aid Main Street buyers, though experts doubt major price drops. In this pivotal moment, markets celebrate the Greenland thaw while bracing for aftershocks. Trump's dealmaking averts immediate crisis, fueling rebounds across stocks, crypto, and risk assets, even as gold and silver consolidate near peaks. Yet geopolitics remains the wild card. Tariff ghosts, alliance strains, and policy unpredictability could reignite volatility. The drama unfolds daily, with billions hanging in the balance.